MarketStrategy.com.
Hi, this is Chris again. Looking at the upcoming September 8th trading session, I've got the economic calendar in front of you. Quite frankly, though, the economic calendar really isn't much to look at. Monday's going to be a very quiet day. Quite frankly, beyond that, it's difficult to get the markets too excited about any particular announcement after we just had non-farm payroll. Because of that, I'm going to go through this rather briefly, and then I'm going to probably spend a bit more time on the charts in this particular analysis. I see the Swiss unemployment rate comes out, 3.2% is anticipated. That should have a direct effect on the dollar Swissy currency pair. Beyond that, I don't see any point in paying attention to it. It's not going to move the markets. It could move the markets in favor of the franc, and quite frankly, that is a counterbalance to the euro dollar, if you will. And as a result, with all of that bearish pressure over in that market, any drop in the dollar Swissy has me looking to buy on signs of support. There is a CPI that can affect the Swissy as well, but again, I'm not looking for much out of it. I do see German trade balance, though, at 16.8 billion. That could move the euro and the DAX. The euro looks horrible. The DAX, on the other hand, looks like it's somewhat supported, and that makes sense considering the ECB has just cut rates. So if the trade balance is poor, look for a weak euro and a stronger DAX just based upon stimulus. The rest of the day, really not a lot goes on. We've got some things going on with North American, like as far as technically speaking, but really it isn't until we get to the NAB business confidence in Australia that there's anything of any significance, in my opinion. With that being the case, it could move the Aussie dollar, but really beyond that market, I don't see much effect. Looking at the charts, the one that I am following the most right now is the S&P 500. We're so close to breaking out above 2010, it's not even funny. A break above there does have us very bullish of this market, and it has us looking to buy long term at that point, because that not only breaks above an obvious consolidation area, but it breaks above a shooting star. Very bullish sign. I also should mention that a pullback to 1990 also brings in the buyers on the short-term charts too, so I like the S&P 500 either way. And this is the euro dollar. You can see we tried to rally on Friday and just gave up the ghost. 130 has served as resistance. I've been short of this market for some time. Quite frankly, on a fresh new low, I'm willing to add to that position. I think we're going to hammer this market down to about 128. Look for those German trade balance numbers to possibly fuel more selling, but at this point in time, there's just no way you can buy this market. And I mentioned the DAX earlier, so let's take a look at it. It is fairly bullish. We are starting to stall out here at this gap. That makes sense. So look for maybe a slight pullback and then more buyers into the overall uptrend. I think 9,900 will be targeted, and then eventually 10,000. That is my target longer term. So as we dip, I buy the DAX. And this is truly a scenario where binary options are going to be the best bet. Just quite frankly, because it limits your risk, and you can play for ultra short term with some brokers, of course. You can play as short as 60 seconds, but in reality, I am not interested in selling until we clear below the 9,600 levels, and that's not something I think we're going to see anytime soon. With that, I've looked at the Monday, September 8th trading session.